Greetings, market rebels. Welcome to this week's macro measure. It is Sunday, September 24th, 2023. It's about 22:11 a.m. here on the East Coast. I'm going to flash our disclaimers here and then going to flash a couple other slides, and we will then start to roll along. Here is the disclaimer. You could have a quick look at that for me. And then here is our intellectual property rights notice. And if you could have a quick look at that for me. And then finally, we're going to look at the two slides, this week's stream that's going to be coming your way. And anyone can pause here and grab a screen cap if they want to use that to read through as we go through this. And then also take a look at last week's stream in case you want to see how things have changed from week to week and what we were talking about last week, just kind of as a backdrop. But I'm going to come back to here. I'm going to hit the stop share for now and reposition things, and just bear with me, please, on that. I have to say that I'm going to try to go quickly. I may not cover every point. And the reason for that is that I am kind of frustrated because I was recording and going through quite a bit of stuff. Unfortunately, unfortunately, Zoom did not record this. I don't know what happened. Inexplicable. So I'm kind of pressed for time now with what I've got to take care of them, but I'm going to switch back over to share on screen four. Okay, so what I'm going to do is cover our tabs first off. And I just want to establish a few things that we did cover this, I think, last week and the week before, right? September is just a rough month, right? And I'll splash a few different tabs. You can see that historically it's the worst month, right? Everything we can, depending on how you want to look at it, right? You've got it's the worst month, kind of, right? Stocks do not like September. It's all there, right? So we knew that, and it was pretty obvious. And August wasn't great, but they did save August at the end with a nice little burst. But September has been rough. And the interesting thing is that when you have a rough start to September, you also have a rough finish most of the time. So in terms of September's performance, when August is negative and the first half of the year prior to, or I should say Jan through July, are up by greater than 10%, the overall performance that you get in those final 4 months is actually pretty good. If you could see that as positive all the time. So there's that way of looking at it. If the other way of looking at what we're facing here with the final week coming up is, you can see that it's generally pretty rough in the second half of September. If the first half of September was rough, you can see that. So it's not a pretty picture on the recent occurrences on that. So just keep that in mind. We did talk about that, I believe, last week. Here's another view of what was coming up. That was really last week into this upcoming week. So not really, again, not a pretty picture, which kind of makes sense. This is our reminder on, if you get rid of the AI mania, right? Remove that from the picture, then you really have a flat situation on your hands. So that's really responsible for the amazing performance. Those amazing performance of some stocks related to AI is really what has driven this market. And you can see that the breadth situation that I've been mentioning here and there, not good. Like, there's your NASDAQ performance, right? Here's your NASDAQ up here in the bluish line, and you could see the NASDAQ breadth, which is just not good. So we've been making that case that took a hit. That was one reason why we were, really more of a wait until you see what the Fed has to say, because it was a wild card. But overall, without that, we would have had a much stronger bearish lean last week, and we had a bearish lean until after bearish lean. Once we saw the news, you probably had a bearish lean. This is interesting, right? Because this is your U.S. Conference Board leading indicators, and you can see that there's even a brief recessionary period here with this thin gray line that we saw back with the before they came up with so many trillions of dollars to jam into the economy. But you could see whenever this has gone negative or close to negative, you could see that there's a recessionary period. We're there again. So again, this is one reason why I've been saying I'm not sure what I'm missing. I still don't see this, which creates a wall of worry, but I still don't see the wonderful stuff that they're talking about. And additionally, here's another look at the weakest period, and this came out earlier last week, and you could see that the end of Sep tends to be rough here. This came out so that would pretty much encompass nearly the balance of the month. That it's the weakest 10-day period of the year. So we might still have more, if history's to be a guide, we might still have more downside. Also want to note that we said keep an eye on yields or rates, and you can see that if I go here on some of these, you can see that this 2-year, you got to go back to get to this level. So we haven't been here in a long time, and same is really the case on the 5-year. We have not been here in some time. I'll give us a longer view on that. Again, you're going back somewhere near 2007-ish, 2007-8 area on that. And then finally, you've got the 10-year, and we'll do the same thing on that one if they let us. It's kind of hesitating there. Here's your 1-year view, but then if you go back to all, you can see these things have really gotten up there, right? Again, you're going back to 2007, it looks like there, to get up to rates this high. So rates really haven't been here for 15 plus years, in roughly speaking. So that's, again, I don't think that's a joke with an economy that's so dependent upon debt and so over leveraged, I think, with debt. Just wanted to follow up and say, look, the percentages probabilities really haven't moved. If you look at what's going on, they've got us, chances are we sit still as of right now. This has been pretty consistent over the week to week, right? So that didn't move much even after the market sold off. If you look at this one, we are a little bit different here. We went down a little bit that we just stay pat, and we went up a little bit that we, in terms of probabilities, that we go up a little bit in rates, but not that much. So it's kind of a minor change. Kind of Dec and Jan are leveling off, and you can see here it's a little still favors sitting tight probability wise, but this combined up here puts you somewhere in the mid 40s. So you're looking at it's sort of balancing out at that point. Just wanted to note on a couple things to kind of talk about breadth a little bit. I'll put MMTW in here for us. And we were saying, that you could still have a level, a little bit more happening here where you really, really get rocked. But notice that I don't think even on this, which is pretty down there, I mean, you could say for sure, hey, this pullback ran its course, and not be really talking out of left field type of thing. But we could see that often it gets a little bit deeper than this, the percent of stocks above their 20s. So this could still be more of it gets rocked and get a little bit more overdone. So that's why I'm saying we are oversold in some ways, but I'm looking at it more like we are, let me see the 200. We still have room. So before we get bombed out, here's the percent of stocks above the 200. They got hit pretty hard, but notice, they're really not down near what you would say is a super low, right? You wouldn't think that this is really extreme. So again, I think there could be more to this. I think it's MMFI on the percent of stocks above the 50. And you can see that's getting there, much like the 20, but it too has more room before it really gets bombed out. Even if you throw out this COVID situation here, which was probably an extreme, the other extremes are a little bit lower. So I think there's room to drop further. This is from our own, just to kind of rehash this a little bit, because we haven't really made this point before. But if you look at this from our own newsletter, you can see that the third year of the cycle that we're in, presidential election cycle, that is, it tends to be this rougher period at the end of September. So the other years are also kind of not wonderful. As a package, they're probably on balance a little bit weak overall. But the third year tends to be pretty weak as September ends and you bring in October. But notice, right, that there is then some sort of a rally attempt typically, and that worsens in the third year. The other years, it's not so bad, really. It's really not as bad. So we could still be in for some rough sailing before resolving higher, as all of these years do, typically, right, as you get into Nov and into Dec. So just keep that in mind, that we may not be done yet. One good thing, right, is that we are getting, the sentiment is now at a 16-week low, according to the AAII sentiment survey. So if you want to say, yeah, we're kind of there, well, we kind of are. You can't really say you're not. You are below your historical averages on bullishness, and you're also a little bit overly bearish versus normal. But still, it's not extreme, right? It could probably get a little bit more extreme, I would say. You just like this fear greed measure that we look at from time to time, and we note that it's an imperfect approach probably, but still it's something we can reference. This is now went from neutral to clearly in the fear zone, but not extreme. So it's really kind of confirming what the charts said to me when I reviewed them. And here's your timeline just to be thorough. And you can see that you could definitely drop a little bit more for sure before you get extreme and you get really that more tradable low. So I don't think we're out of the woodwork. I should say we're out of the danger zone, not the woodwork. This is a look at the SPX that I set up to get away from all of my indicators and stuff like that. And I just wanted to make the point that no matter where you put a support line, both of those, of course, would be the blue lines, but beneath here, wherever you put a support line on that, whatever you prefer, you're still pretty far down there. I mean, here's SPX 4200. So this would even be still, right, if they hold somewhere near there, that would be right near the 200-day, I believe, as well. And if they hold somewhere near there, you're still, this sort of longer term trend is still intact. So that's what I mean by you're not bombed out. There's a lot you could still drop, and the bulls could still be in control. Now, I don't even know if you could say, well, the bulls are done, right? Even if they drop below those lines, I don't think you can. I mean, I think really that to really think that this thing's over, right? What we saw from Oct through July is over completely. You really need to knock this low out, in my book. Everyone looks at things differently, but if they can't hold that low, then it's a different story. Then it's like, okay, that tradable low that was really phenomenal trading, honestly, through July, overall, it was pretty good. There were a couple kind of like this period here wasn't all that much fun, but overall, it was a good trading environment. If you go all the way back down to here, you'd still be above that. It wouldn't be a good thing for bulls, clearly, but it would still be a very serious pullback or more, greater correction. But if you hold there, right, that could mean, right, that you stabilize and they start trying to work things back up. So that wouldn't be good, though, for retracement purposes, so on and so forth. Remember that this is there's gaps, sort of, right? Like even in SPX, there's a gap right there. I could point out other gaps. I'm not going to spend time doing it, but there's a lot of gaps that they left. Now, I don't really worry about those too much after 4 to 5 days has passed post gap, and the trend still is enjoying, right, that push in that direction that the gap was in. But when you start to weaken now, right, I would start paying more attention to gaps, and I would just do it in that order where, oh, where's my first gap that they might think about closing if this really weakens? Where's my next one? And work my way down on it. That's really just my incremental approach that I use. So I just wanted to show all that you could still really be, you could be fine all the way down to 4,200. And I think one other view I could show on this, on the SPX, is that I'll just make it very simple. And I think if I put my cursor right near 4,200, which is again right near where the 200 SMA is on the daily chart. On my daily charts, it's right near there on SPY. It's at 41811 on SPY. But I think if I put it right near 4200, like I just did, you can see that there's definitely some action there, opens, closes. There's some highs. There's some hesitation there. There's a gap near there. We traded around that level back in here. So I think 4,200 makes some sense as a result. That's what I would say. If you let me make a switch now over to a different chart. Let me see if I can stop that share and switch to another screen. Should be screen 3. And if we switch over to this one, and we're now on SPY, not SPX, but I'll enlarge this, and you can see that's the purple line right there, right? So if you're wondering, right, where could this go to? It's not that much further, too, really. I mean, we're only talking about really about 3%, I guess. And you're not too far from this gap fill. And to have an overshoot and have them even drop further wouldn't be out of the question when you get these really rough sell-offs. I just would say, look, the problem I have right now is that if you look at where we are on the RSI, you're already at 32. And you're right near where they kind of bounced this before. You're right near there. There's a bunch of highs near here at this 430 level. This was a big level before. I think this 432 level has been big for some time. I've been talking about it. Originally, I was talking about it as maybe they get the market above there, and that convinces a lot of people to the bear is over and they get involved in it. And that still could be the case. I just thought it would happen sooner than I didn't think they'd be able to get the market back up this high. And I thought that this kind of trap would take probably about half that amount of time. That if there is one right now, and I'm not saying there is, I'm just saying that could be the case. And so that's why I've got that on our stream, which I think I'll pull over for now just to show it. But on the stream, that's why I'm saying, where is it? There's a trap. Yeah. So this is the big question I've been wondering now. And I feel like that's the thing. Do these folks sense maybe now that they've been trapped because the Fed seems to be holding steady to we're not going down yet. And they seem to rush in on the presumption that the Fed would not be able to stick to that course of action that they have to this point. Some people may say, well, there's a little bit of a head and shoulders in there, and you've got more of a compound right shoulder. You might see that. Nothing wrong with that. And that's rough. That isn't really a good thing, I don't think, right, if you're a bull. You could also say, well, look, there's lower highs in place here. Let me just, I'm a little gun shy after what happened to me on the botch recording that didn't happen earlier. So I just wanted to make sure we're still recording, and we are. So, let's double check though on that one. All right, good. So everything's fine on that. So yeah, so that to me looks really rough. That to me almost looks like by the time this should be over, I would think that your short term sort of oversold. I would think that maybe they try to manufacture some sort of a bounce. But here's what I'm talking about in an important sector, which is SMH. And I think the technicals have worked well in here for us overall. And you can see that there's this major gap, right? That's all the way down here. And so I wouldn't bid at the high of that day. I would certainly bid in front of that by a little bit. Everyone may be waiting. Everyone that's shorted it could be waiting for that gap to get closed. So I would cheat it a little bit. But anyway, you've got this lower high situation and now lower low there, and it's a leadership sector. And I think that's really happening right in SPY too, where you've got this lower high and you've got this lower low now. And so that really is potential trend change, that the intermediate term trends continue to be lower. That's the argument I would make. I think you're at a tricky juncture because you're already very close to oversold on your daily. And you also left this gap right here. So this fairly obvious. So I don't think you could be shocked by a bounce attempt that they put together, and they try to come back up here and close that, get it back above the 100 there in dashed white, and then attempt to maybe close that gap there that they left near 438. So don't rule that out, but I think the pressure is definitely on the bulls at this point, because it's worth just flashing the one item here, and I'll cover this in sector situation a little bit, but yeah, anyway, you can see that here's my grid of 12 that I cover in sector situation, and nearly all of them really were sold into, right? Nearly all of them. So the only one that really, I think, managed to eke, well, I shouldn't say that. I just noticed XLK, they managed to eke something out somehow. But there's the botched recording that didn't work, right? That I realized late. Anyway, XLE, that managed to hold on, I guess, a little bit, but really you could see overall this was not good, right? Everything started to get rocked, and transports, which could and continue to be a focus of mine, and then XLF also finally is getting rocked, and you can see that there's lower highs in place, so in some cases lower highs and lower lows. You have a double top over here in XLC. You got a lower high potentially in XLK. So that's really where we are in terms of all the sectors. I don't want to belabor that since we'll be making a brief video on that, but let's take a look at some of the other ones, and then we'll kind of round things out a little bit. So let's look at the Qs. And I've had some bearish ideas for our traders to go to, for rebels to go to in the UOA probe, so that it's there, right? And kind of sensing that I think this market should trade lower, and it needs a reason to, or a dose of reality that came. And again, now if you get down to something where it's a clear support level, like you're in the Qs, it's this 355-ish level, excuse me, could be argued to be that there's some support there. So if you get down there and you're oversold, probably, right, in the absence of really material news, right, something that's significant, and you get down to there and you are oversold, which you're at 35 now. So if you got down there, you'd be somewhere near the 30 on the RSI, officially oversold. I wouldn't care personally if it gets to 31 or 32. I'm considering it oversold anyway, but then it makes it harder without a big news driver, and that could be dollar is moving up. It could be that yields again are moving up and they're doing it strongly. Then I would say the chances of that support line holding are lessened. But if there's just more selling left over on Monday morning, and they take it down to there, and you start to see the TNX roll over, or yields that you're watching roll over, and the dollar maybe joins that party, then I would say the chances are, at least on the first attempt, it holds, right? So that's why I'm continuing to say I would keep your eye on this, and I have it noted right here. This has been what we've been harping on now for months, but I would keep your eyes on TNX and DXY. I think they are short-term overbought. It's a weird way to state it, but I'm just saying that's what I would, just to keep the nomenclature there. They remain the story that people are talking about, but I think the economic deterioration could join them as headlines. So if they continue to power, I would I'm saying stick with that as the tell, right? And I think you have to remain at DEFCON 1, where you are playing defense, or you're playing offense to the downside for now, right? We all know that a relief rally could be right around the corner. There could be at least a bounce attempt that they try to engineer. When you're this oversold, you find support. Like I said, if there's a little bit of backing up in the TNX, and that's the thing. Let's look at the TNX to kind of put that in perspective. Here's TNX, and it really screamed on Thursday after what happened with the FOMC. And you could see that on Thursday, you were up at 70 on your RSI that day. Now, you did back off, I think, a little bit here on Friday. And I think, right, we've seen when this thing's gotten sort of up there, right, at times, it does tend to back off a little bit before it tries to go again. So I think that's where I'm coming up with. If this does start backing up, I think you should expect a relief rally attempt. That's what I would say. DIA, let's look at that. So again, this market, in a way, it's becoming harder and easier at the same time because it doesn't have to be instantaneous. But if you see rates rolling over, you know that there's a good chance that some of these people are going to start saying, well, that's the rates are done. They've made their move. They're coming back down and they're going to start buying. Some people will start buying, and other people are going to say, look, rates continue to go higher. This thing's going to get crushed. But remember, this possibly drew in some fresh shorts, and these guys are really good at creating short squeezes. So I think you're in a tricky time for the market. Here's the diamonds, and they're really close to their 200-day and their 150 in purple and rust colored respectively, right? So that's what you're up against there. You're getting close to some major longer term SMAs on the daily. XLI, which the industrials itself, that did finally roll over. I had a bearish idea in there for a while, but it expired. I think it did work out a little bit, but it just wouldn't plunge. And it was kind of having me scratch my head, like, what are they seeing that I don't see? But I don't still think, I think my general kind of seat of the pants take was right. Of, hey, these things should sell off. It just took a lot longer than I hoped that it would for traders in UOA Pro. But there's still a gap that could be closed there. That is below the 200 there in purple. So just keep your eye on that because, right, that's certainly getting down there in terms of oversold. So it's been ugly in there, though. That's really been an ugly chart that finally broke. IWM too, right? To me, this is ugly. Right, you could see the lower high. Now you've got lower lows. You're coming down here where did you fill the gap, and you became really close. So that's if I were waiting for the gap fill, like I would have already bought, right? Like I wouldn't be waiting for the last few cents. And I'm not saying that it's going to ramp right back up. I'm just saying, like, that's way close enough for me to say, if I were planning on, let's say I saw the breakdown and I've been trading expecting this thing to keep falling, I'd be covering a lot of my delta there at that point. This to me also looks like a little bit of a, let's see, high 170, 156. There's a little tiny super mini gap of only just a few pennies. So I'm not really, it's kind of like, I'm not really going to say much there. That's just such a mini gap. But could it matter? Yeah. And there's other support levels in front of that, though. So I think, my projection on that, you can see that I've got that dropping to about 174 or 72. So again, if there's actually carryover from Friday into Monday's opening, and you do see this kind of like gap lower, rates really haven't moved up or yields haven't moved up that much, I would probably look for the first sign of them trying to rally and cover, because if that scenario plays out, because I think you're getting close enough to oversold that I would rather sort of, if I've been holding on with some bearish leans, I'd probably like to take that money that's there, and then knowing they could try a little bit of a turnaround Tuesday, I'd rather almost, again, this is the absence of a massive story that's driving it or rate spiking. I'm just saying kind of like neutral rate dollar situation, no massive news and more weakness. On that one, I would cover, and then I'd rather have to get back in with a new position after having collected or captured my profits. Just my way of doing it. But you really have a hard time liking this. I think I've been saying this for a while. I think this is the weakest one. And that is something that makes sense. The market doesn't always make sense to me, I guess to a lot of people. But I think the fact that rates are going up, and these are the companies that are dependent upon, they don't have those. They're dependent upon commercial loans, and commercial loans are not as easy to come by. People aren't reaching out for them the way they were with rates where they are. You can see the head and shoulders pattern. Even if we do like a neckline, let's just say there's a neckline near 181, that's 199, that's 18 points. That certainly puts you down at about 163. And that really puts you down there in terms of a 100% projection off of that head and shoulders, if you want to call it that. Again, like, it's just part of the mix for me. I'm not really beholden to that projection. I'm just saying that's what a lot of people would expect. And then, of course, most people say, well, I'm going to expect to get about 70 to 100% of that. So 70% of that would be, obviously 30% less than that number that I projected it down to at 163. So you'd probably be looking at something closer to probably right about somewhere in there, which another 170. I'm sorry, I'm at the wrong juncture. I had something else in mind there. I can't get that to pop up. It probably would be a lot closer to about here, those lows right there, somewhere in that ballpark. So you'd get another, from here, you'd get another almost 7 points, roughly speaking, which is a pretty decent drop. Another, what is that, about 4% roughly. So not out of the question for sure. And that's really on the conservative side. This 161.8% projection puts you right there. I've got a flat line at 163.3. For some reason, I drew that, so it must, and I didn't get rid of it, so it's still valid from before. So that all kind of makes sense with these projections right now. And that does kind of match up with what we saw in the newsletter in terms of the presidential election cycle. You do have more of a rough patch this year. We might have maybe have a little bit of a relief rally attempt, but I would be trading more, especially something like this that's been really hurt technically. I would be trading this more as a bear first than a bull at this juncture. I would just say, look, if they run this back up and you start to see it roll over, but again, it's not just about what that particular name is doing. You've got to do this within context. And I think the context is going to be, what are these yields continuing to do? And I think what would be maybe a really bad situation would be where you kind of know that there's more selling on the way, would be if rates are backing up and yet the market can't find a reason to care. So if rates are coming down pretty hard and the market is not finding a way to rally, that's sort of telling you there's still some sellers out there that really feel like maybe they miscalculated. Hey, maybe I was just too early. So keep that in mind as well. So that is really the big stuff that we typically cover. Let me double check on my notes for everyone. Probably can jump into here and say that, right, this is the thing I'm continue to wonder, right? If we really just saw a really strong and fairly long bear market rally from OCK through July, and OCK of 22, that is, and now we're due for more selling and we're actually about to return into bear market mode, or are they going to be able to hold things up? And maybe that'll be the big story of this fall, right? We will see by the end of the year what really happens in terms of, are we in a protracted bear that kind of created this false dawn, or are we really in a bull because they hold it, rates start to even out, maybe top off, and then they start to go again. But remember, that doesn't really happen right away. What really happens, according to the stuff that Ryan uncovered, is that the carnage begins once the Fed starts to cut. So that would really be at odds, though, with the way that this third year finishes. It would also be at odds with the way the fourth year typically is in the presidential cycle, which is the second best year among the four, with this third year of the cycle being the best, nearly twice as good as the fourth year. So this is a little tricky right now. The market is right here, right? The market is tricky because we are oversold but not bombed out. I would just continue to watch how equities trade in relation to what's happening here, especially with rates, the dollar too, but especially with rates. And if we start seeing signs of deterioration that I think could continue to show up, that really could then exacerbate that feeling of being trapped if you're a bull that just did not get out. You had this amazing run of 50+% in the Qs from the OCK low of last year through the high that they managed a few months ago, I guess in July, and you didn't get out. That was probably not a good decision to at least take some profits. Anyway, I would expect a bounce attempt. I would as I noted, I would still be a seller though. right? And especially if rates and the dollar continue to move up. But like I said, they may need to chill out a little bit. They may just have gotten a little overdone, especially the rates, TNX. That might back up a little bit. A lot of times when something breaks out to new highs, like we saw where we had to go back to 2007-ish, you do get a little bit of a backup and then see if it supports. And then if it holds there and goes, it's probably potentially more bad news for equity bulls. I'm still having a difficult time buying what these guys are selling. I'm not even sure what they're selling anymore, too. I mean, that's going to get better. Why? What's the rationale? I mean, why are we you need to have a little bit more, like it's going to get better if you're making an argument. If you want to say, I just think that human nature continues to play out as it typically does in the third and fourth year, I would accept that as an answer. But if you're trying to tell me, well, I see this wonderful stuff happening here, I just don't see it. I don't see it happening, wonderful stuff happening in Germany, Europe, China, Asia. I just don't see wonderful stuff happening globally. I certainly don't see wonderful stuff here in the US, where the most important stuff, which tends to be in my mind these days, we saw the SMH earlier. Let's do this one. Let's do two, actually. Let's do XLRE. This is your commercial real estate ETF, I believe. And you can see that I've been saying keep an eye on that for folks that watch Sector Situation, because this to me is not good. When you're starting to really get under pressure in commercial real estate, that is not good, right? You might start losing the low that you had from OC of 22 and making new lows there. I don't think that's a good look, right? If your commercial real estate sector is under that much selling pressure, right? You lose that, what are you going to go back to? Got a couple other levels there, but really, you've got to go to the COVID reaction, the negative side of the COVID reaction right there. And this thing's on its way to breaking down again, maybe. Now, this is the weekly chart to give us more time to view. And the RSI is in the mid 30s already. So I'm not saying that it just goes in one fell swoop, but it could. I just don't think usually that's the case. However, right, many of us have been wondering, how is housing still continuing to hold up? But you can see that housing now, the XHB ETF, and I've had some ideas in here, I think, and on some individual names where I could get them. But to me, this still has more room to fall. And we did note that, the second little pop attempt was a little bit weaker on your indicators, kind of negative divergence a little bit there, but it is really a lower low, so you really can't call it that. Slightly lower low, but just not as healthy. This is coming off now. It's at 50 on RSI, so it's got, on the weekly, right, it's got more to fall if it wants to. And on the daily, it's probably a little bit different story because it did have a rough week. Let's see where the RSI comes in there. That's at 32, yeah, already, right? So I think this 150 here in Rust near 74, I would think somewhere near there, it tries to find a little support, somewhere around there. But the point is, the larger point is that these things have cracked finally. And that's a big deal. In my book, those two, your transportation, your financials starting to look weak finally, and your SMH with that major gap, like this is not a joke at this point. This is real risk to the downside for equities over the next, let's say 6 weeks or so, get us into mid-Nov. But that all would, more equities weakness overall would be in accordance with what we've seen. So I don't know what they're going to do to change this narrative, right? I think they really do need to find some way to segue to something else. I'm not sure what that is, though. Like maybe there will be something, and it's just escaping me at the moment. But I'll just finally show this final thing. No, there we go. That didn't pop up though. Oh, there it is. So yeah, I could bring this over. It might be the best way to do this is just to bring this over to here and end on this. But this is really this pattern, and I'm not someone who is really beholden to, it's going to trade the pattern. It's worth noting to me because it's just composite sort of human behavior over the course of time And this is what has emerged from that. And so we know that people tend to act similarly in a lot of situations, even despite other factors being replaced by other factors in each particular instance. You still get that type of overall behavior. And you can see that SEP ends ugly in this pre-election year for the presidential election. And then you do have this rally attempt typically. And then you have even worse stuff transpire in Oct. So, right, that's what you've got to, and then you can see it's kind of rough until even the second half of Nov, and then they start to come after it. So if this continues to play out, this is what I'm going to end on here. That's the issue right there, because you might, that's why I'm calling it a tricky market. It's almost set up perfectly too, with a little bit more weakness to get bombed out and to see a rally. Right. So if they have, like I said, if they have a rough start to the week, do not play games with your rolls and your trims. If the TNX and other yields and the DXY are heading higher, if they're heading higher, you could probably still have that lean. But if they are heading lower, then I would certainly not be playing games for too long. I'd rather always re-enter when things get extreme and I've had a good number I can capture. I'd rather re-enter the trade fresh with less risk, less dollar risk, because I'm disciplined and I pick out levels I know I can trade against, and then that will get me out that are levels that are nearby. But for now, right, it's a little bit tricky. If I had to kind of force an opinion, I would say we see a little bit more weakness. They try a rally attempt. I don't think that would maybe fare all that well. And maybe you have another rough week, but I think that's just a force. I think if you want to stay smart, remain smart about what we've been doing, you keep watching how stocks trade in relation to TNX and DXY, but especially the TNX and some of those other yields. If they continue to power, I think it's going to be very challenging for stocks. If they start to give it back because they are a little overdone, then you might have a chance for a little bit better of a rally, and maybe it lasts a little bit longer. So that would be my parting advice. Thanks to everyone for tuning in. I hope something to share with you helps you out this week or at some point in the future, and I'll see you in Sector Situation.